So we know that Finance Minister Nirmala Sitharaman is set to present Union Budget for the financial year 24-25, and ahead of that, joining me today on our special budget segment is Radhika Pandey. She is Associate Professor at NIPFP, National Institute of Public Finance and Policy, and she will be sharing her perspectives on what to expect from the budget and sector-specific needs. So, ma'am, I want to start this discussion by asking you what are the key things you take away from the interim budget, and how do you think they'll set the stage for the full budget this time?
Yeah, so if we look at the interim budget and also the actual numbers that were released after the interim budget, which is for the full financial year for the FY24, what we see is that government's tax revenues have been quite buoyant. So whatever estimates were fixed as part of the revenue estimates, government has done better than that in terms of both direct taxes as well as indirect taxes. In fact, net direct taxes have posted a growth of 17.7% over last year. Indirect taxes have also done better than the revised estimates. So actual numbers that we have, it sets the stage for the full year budget because the revenue position of the government looks comfortable. The other important highlight is the hefty RBI dividend that the government has received, which is 1 lakh crore additional to what it had budgeted in its budget document. So it's 1 lakh crore more than the 1 lakh crore that was budgeted. So that again, there's an additional fiscal space of 1 lakh crore. So coupled with buoyant tax revenues, this additional fiscal space gives scope for the government to either move faster on the path of fiscal consolidation or do some additional spending to support those sectors that have been relatively lagging in India's growth story. The
Right.
other entire, just one point more.
Sure.
The other focus has been on capex because in the interim budget, the focus has been on capital expenditure again. Government had budgeted 11 lakh crore, which accounts for 3.4% of GDP. It needs to be seen whether that focus continues in the full budget or not, given the various kinds of conflicting demands for additional spending, demands from the coalition partners. So it needs to be seen whether the focus, the continued persistent focus that we've seen on capital expenditure for the last 3-4 years post-COVID, will that continue or not?
Ma'am, also when we talk about inflation is high right now, and in order to support the lower income households, what do you think will be the government's strategy? And also, secondly, I want to ask, do you think that these benefits will be provided in terms of direct benefit transfers, or there'll be some other major policy announcements from the government side?
Yeah, so you're right, inflation has been a problem, and particularly within inflation, it's the food inflation which has resulted in the overall inflation remaining elevated, and that has made the purchasing, that has impacted purchasing power of middle income households and low middle income households, poorer households. And particularly if you look at the structure of inflation, rural inflation has been surpassing urban inflation. So that's another point, because food accounts for a bigger proportion in rural inflation. So we've seen that rural inflation is higher. So with this backdrop of higher inflation, there could be a number of steps that the government could take. One is to boost the purchasing power by providing some kind of tax cuts, concessions, maybe raising the exemption limit. That is one possible pathway. The other is increasing the standard deduction. That's another pathway. Or if the government doesn't go down the tax path, then the other option is increasing the income transfers for farmers, increasing it beyond rupees 6,000 per annum under PM Kisan, and increasing allocation for some of the rural sector schemes like the PM Awas Yojana and the Gramin Sarak Yojana, which already they have done, and the post-elections in the first cabinet meeting, they have committed to increase the number of houses to 3 crore under the PM Awas Yojana. So that is helpful because it helps in generating employment opportunities in addition to improving the living conditions of people. So there are various possible pathways, but certainly something needs to be done to boost consumption, because even if we look at the national income accounts estimates, we've seen that while overall GDP growth has been quite robust at 8.2%, consumption has been lagging at around 4%. And given that consumption accounts for 60% of the GDP, there is a scope for boosting consumption through some policy measures, and that perhaps also explains why private investment is not picking up, because there is unevenness in demand, and so long as there is unevenness in demand, we don't see a sustained pickup in demand. It's it's imprudent to expect private investment to pick up. So that is the pathway that the government should be taking.
And when we talk about sector-specific needs, what do you think, what all sectors are currently under the most stress? And also, how do you think when the government look at these challenges, what are the measures they can take in order to tackle these sector-specific needs?
So one of the sector that they should definitely look at is agriculture, because agricultural production has been impacted due to climate change. Food production has been impacted due to climate change. We've seen food inflation rising due to unseasonal rains and due to extreme weather conditions. So one sector that needs to be supported in various ways. One is the increasing income transfers for the people who have been impacted. But the other way is also to support agricultural infrastructure, logistics, and enhancing the allocation for research and development so that climate resilient seeds could be developed. This is very important because that will then help in bringing down inflation when the production, more and more proportion of production of both Kharif and Rabi crops becomes climate resilient. So that will go a long way in reducing food inflation as well. Similar steps can be taken for tomatoes and other perishable items also to enhance their storage capacity and to bring down the fluctuations in prices. So one sector that needs support is certainly agriculture. The other is in general the rural sector, because as I said, rural inflation has been higher and purchasing power and incomes have been impacted due to that, and also due to climate change. The other important area or sector that needs a push is job creation, and that requires focus on labor-intensive manufacturing. Because we've seen the recently released data, the CLEMS database that was released by the RBI, that also shows that employment generation is happening, but it's happening only in those sectors which are traditionally having low productivity. Their employment generation is in agriculture, construction, trade, and they have, because CLEMS database also provides the labor productivity data, and there we see that agriculture has the lowest productivity, construction and trade relatively lower productivity as compared to other sectors. So something needs to be done to incentivize employment in labor-intensive sector, and also to boost spending on education and skilling. Those structural reforms are very important because if we want to take advantage of demographic dividend, then we have to ensure skilled employment generation. The current structure of employment generation is of concern because overall employment numbers are rising. But when we look deeper, there are infirmities that need to be addressed. And the most promising way to address those is by supporting and incentivizing employment generation in labor-intensive sectors like textiles, toy manufacturers, etc.
Right. Now, when we talk about fiscal deficit, it is also one of the major parameters which actually will set the pace for the government for the next 5 years. In the interim budget, it was set, the target was at 5.1%. What do you think in the final budget, the target will remain the same or it will be lower or higher than this?
Yeah, so that's the the challenge or the trade-off between which the government faces, which is given the additional fiscal space that it has, in the form of the RBI dividends? Will it go for a faster route towards fiscal consolidation, which would mean reducing the fiscal deficit lower than 5.1% for this current financial year, or using the additional fiscal space to, as I said, provide support to the sectors that need support? So I think that's the trade-off, and there are pros and cons of both the approaches. If it will be imperative to also go down the path of fiscal consolidation, because at this time when we've seen that Indian bonds are included in the global bond indices, foreign investors, other investors, credit rating agencies, they are all looking at government's fiscal consolidation roadmap. And if the government is able to convey that it is, consistent on its path towards fiscal consolidation beyond FY26, it will help in boosting inflows, foreign capital inflows into India's debt market, and will help in reducing the cost of borrowing. What will be not a good step, or something which will create concerns for the bond market, will be if the government deviates even from its 5.1% target, or fixes it at 5.3 or 5.2. If it goes slow on fiscal consolidation target, then it will create some pessimism or concerns in the bond market, and could lead to higher cost of borrowing. But given the current situation, I think either government would stick to its target, or it could announce a target which is tad lower than 5.1%, maybe 20 to 30 basis points below the 5.1% target. And even if that is done, it will be a very credible step towards fiscal consolidation, and something which would be cheered by bond market.
And one of the headlines which made in this budget was the key expectation to boost demands and increase consumption. What all ways do you think that the government will be able to pull that off?
Yeah, so as we talked about earlier, one of the ways could be through tax concession, because typically till now the approach has been to simplify the tax regime and to do away with exemptions and deductions and move towards a lower tax regime, which is the new tax regime. We have two regimes, old and new tax regime, and the government is encouraging people to go down to use the new tax regime. So if the government is going down that path, I think the next logical step should be to at least increase the exemption limit from 3 lakh to rupees 5 lakh. And that would then adjust the other slabs accordingly, and would provide some increase in disposable incomes of people, and would help in boosting demand. So that is one way. The other way is to provide steps to create possible pathways for generating employment opportunities, to create conditions right for employment opportunities, both for unskilled, semi-skilled workers as well as for skilled workers. So that's the other policy instrument, because if more employment opportunities are created, people will have income, and that will help in boosting demand. So, and the other step is definitely, as we talked about, increasing some level of income transfers under the PM Kisan Yojana, and enhanced allocation towards the rural schemes like the Gramin Sadak Yojana, Awas Yojana, and Manrega. So these are some of the steps that would directly or indirectly help in boosting demand. The scale of impact will differ. Tax concessions will immediately increase disposable incomes in the hands of people. The other measures will have a relatively, slower impact in increasing income and boosting demand.
When we talk about multiplier effect of any parameter, capex is one of those parameters where you also increase investment and create jobs. How do you think that the government will be able to leverage on that? What steps it will be able to take in order to increase capex? And especially when we talk about infrastructure sectors, because a lot of other sectors are interlinked with the infrastructure sector. How do you think that will work out for the government?
So I think government has been promoting capex, and we've seen that capital expenditure as a share of GDP has risen to 3.4%. Progressively, we've seen the quality of expenditure has increased. The hope was that this would lead to crowding in of private investment, because that was the approach with which the government decided to pump prime the economy by increasing capital expenditure and also providing states interest-free loans so that they can also promote capital expenditure in their respective states. Now, we have seen that while the government has been promoting capital expenditure and capex infrastructure through national infrastructure pipeline and so on, but we do not see private investment picking up in a sustained manner. And that is something that needs to be taken note of, that why private investment is not picking up, despite the fact that companies' balance sheets are quite healthy. It's not that they are leveraged, that they do not have the capacity to invest. But the fact that they are not investing beyond the capacity utilization of 75% means that there is some structural weakness in demand. So unless they are very sure that demand will pick up, we will not see the green shoots of recovery on private investment on a sustained basis. And from the government's point of view also, it's not feasible for the government to keep on increasing capital expenditure because there are fiscal constraints. And there could be increase in capital expenditure by the government in absolute numbers, but the growth of capital expenditure may slow down. And also, as a share of GDP, we could see either it has already peaked, or maybe as a share of GDP we could see a moderation. So while in absolute terms the focus on capex will continue, but at a more moderated level, and I think at the same time parallel steps would be taken to boost demand so that private investment also starts picking up at some stage, and fiscal imperatives are also taken care of.
Also, if you can give closing remarks on how the government will be able to strike a balance on fiscal discipline and growth-oriented policies.
Yeah, so it's very important to look at the macro backdrop, and we've seen that the economic growth rate has been quite robust. And even in terms of the twin deficits, if we look at the fiscal deficit, current account deficit, they have been quite at a manageable level. In fact, the fourth quarter, we saw current account surplus for the government. So on all aggregate parameters, on all aggregate macro variable, economy looks in a healthy position. Even for the current year, if you look at IMF, they have upgraded India's growth forecast by 20 basis points. So even despite global headwinds, India is likely to grow, post a growth of 7% plus. So it's time to look at the unevenness in growth, and budget presents the first opportunity to look at the sectors that are showing relatively subdued growth. One of which is consumption. The government definitely has the fiscal space. Even for the current year, we've seen that tax growth has been robust. So government has the fiscal space, and there is scope for balancing the imperatives of fiscal consolidation as well as boosting, providing some measures to boost growth, because there is an additional fiscal space. So there is a scope for balancing both. Which side the government will tilt, that we'll see on Tuesday.